What a day. James, you been busy?
Oh, a little bit quiet today. I don't know, something happening?
Yeah, I don't know. But some guy did a shoey on a live stream today. I don't know. I haven't seen what's going on.
That's,
um, I'm,
that's good commitment.
I'm super excited for today's session. We've got three amazing people joining me for the high net wealth strategy session. I'm going to hand over to Leah. Maybe Leah, you can do some intros and we'll crack into it.
Absolutely. What a day you have chosen to run this summit. Couldn't have been better. Hi, everyone. So my name is Leah Dashkina. I used to be a very active member of the Australian crypto ecosystem, but I have recently relocated to Dubai, and I work for a private venture-style investment company here in Dubai, investing in DeFi and infrastructure predominantly. We are joined today by Pav and James. Ben obviously doesn't need an introduction, but I might get James and Pav to introduce themselves and the companies they work for. So James, do you want to kick us off?
Yeah, sure. Thanks, guys. Nice to be here. So as Leah mentioned, my name's James. I help run Australia's leading crypto-backed lender named Block Earner. So we've been in business about 3 or 4 years now. We're designing the sort of product set between traditional finance and blockchain finance, and I'm excited to be here to tell you all about it.
Nice. And my name is Pav, lead market analyst here at Swyftx. I'm one of the founding team members from Swyftx, Brisbane-based, bootstrapped crypto exchange. Started in 2017, 2018. And yeah, just always put the customer first. User experience is always key and first and foremost for us. But yeah, I mean, it's a bit hard to really think of what else to say when Bitcoin's at 100K right now. I'm sorry. It's all exciting.
Awesome. Thank you. And I think the timing of this panel is actually great, because when things like this happen, when the timing of the market is as it is now, I think one thing that's important is always to take a step back and think about not just how to grow, but also how to preserve your wealth and how not to lose whatever gains you've made. So today we're talking about some strategies and methodologies that we can learn from high net worth investors, high net worth individuals, and what they do. And hopefully we can share some war stories with the audience about some of the anecdotes that happened in Pav's practice and for James as well. So let's kick it off. How should net worth investors balance between growing their wealth and preserving in the volatile crypto market? So what are some of the methodologies, or what are some of the things to look at? Pav, let's start with you.
I think quite simply, it's probably the simplest but hardest thing for everyone to do, at least with the conversations I've had. I'm sure everyone else here as well. Take profits. The one thing I think we've all seen through very euphoric, elated bull markets, and even like you could call dead cat bounces during bear markets, like sometimes the sentiment seems like it's going to keep going, and really it just ends up not doing that really. So not to call it out specifically, but obviously we've seen the recent spike in some of the legacy coins in recent times. A lot of people have been holding on to or nursing underwater positions for months, if not years. So even interesting from a fact from that to see how many people are actually taking profits right now is a good sort of indicator as to how hard it actually is to really materialize gains, to then have capital ready to deploy again when the next opportunity comes. Because that's the one, I think, sunken sort of fallacy everyone does have, I believe, from the conversations I've had in the past, that I've got to hold on to this one because we've got such a good entry. Just disbelief that there's going to be opportunity in the future, when you just got to look at it rationally. Like, it's just not the case, right? So I think that's probably what's first and foremost sticks out in my mind.
I think it's something that if you've gone through one cycle, you definitely learn it the hard way. I definitely have in my first cycle. So now that's rule number one. James, anything to add on that, or Ben?
Yeah, I think Pav raises a really interesting point there about, people might hold their bags intra-cycle and slowly convince themselves that it's a great investment, just the timing's wrong. There is absolutely a cohort out there that falls for this trap. I would like to just raise that sometimes it's more about the underlying value of your investment rather than the current price. So it can, perhaps the timing is wrong. and it is fine to be holding something for years. Like Pav alluded to, there'd be a lot of people very pleased right now with their legacy ICP holdings or even XRP recently, right? And they remained committed to that original vision of the token. So I would sort of summarize it with just like, do as much research as you can. So platforms obviously like Collective Shift help you. So understand what you're buying. Don't just buy it because it's cheap. Build an understanding of the asset, and then you can actually start to form a thesis around whether it actually is going to go up or not. And it's not about, if you're just dreaming.
I think
awesome. Thank you, Ben.
From my perspective, like when I deal with our platinum clients who have a fair chunk of money in crypto, I think they forget that crypto is just a part of your sort of broader investment strategy. And I think a lot of people forget what their goals are or why they're in crypto. Like I'll speak to someone, let's say with $20 million in crypto, and they're like, what should I do next? Well, it's like, well, what are you trying to do? Like, do you have property? Are you thinking like more broadly around your investments? Because once you get to a certain level, in my opinion, as a high net wealth, you don't have to take all the risks to try and bet the farm to continue growing and compounding. Like Bitcoin's compounding at 45% a year over the last 10 years. You probably don't need to be holding $10 million of goat to try and like run it up to 100. You know what I mean? So like once you get to a certain level, if you speak to like high net wealth financial advisors, they tend to say once you get past that sort of $3 to $4 million in liquid assets, life becomes pretty easy. And then 10 is that next trigger. And beyond 10 million, there's really no lifestyle changes you get between 10 and 50 million unless you go, want to go and get a private jet. So like once you get to a certain level, I think it's about taking the risk off, sitting in some less riskier assets. Like even if you just sat in Bitcoin with a smaller percentage of altcoins, you don't need to take that risk anymore. I think it's just the mindset, it's the gambler's mindset or the dopamine mindset of like, it's never enough. You're always wanting more. And that can be a real killer to a big portfolio.
One of the other things that we were talking about in the waiting room, once we're sort of waiting for our session to start, is developing a conviction and sort of figuring out when not the top of the market is, but when your personal top is, and when you're going to call it, and when you might want to either exit some positions or maybe take partial profits. So I think that's another important thing to keep in mind, is kind of having a conviction and having a plan and trying to stick to it as much as possible. I don't know, Pav, do you have any sort of examples of how in your practice you've seen this happen, and whether people are actually disciplined when it comes to taking profits?
Yeah, it's great timing, right? So we were just, as Leah mentioned, we were talking just off air about a recent scenario we had on the OTC desk here at Swyftx. A desk specifically designed to reduce slippage and ensuring people can exit their positions quite safely on Swyftx, where it seems like almost instantaneously when the market hit 100K on Bitcoin specifically, this particular person, he or she has gone and basically liquidated a bunch of positions, right? And I think that's a mindset that probably isn't with a lot of people, but it perfectly encapsulates, I think, that sort of thesis of it's more about you setting a high bar for yourself, hitting that bar, and then looking for the next opportunity afterwards. It's, I'm very much against this idea that someone out there is able to call the top. Really, I think a lot of it is luck, but different amounts of money mean different things. I think Ben, you said that perfectly when you said like, once you get to that 3 to 4 mil, when you get to that 10 mil, like they're just different thresholds of ease for your lifestyle. I could even speak to, I guess, like our general flows on our platform today. I've only just whipped it up in the background. Like we are seeing quite a bit of profit taking. And I think that might be just a good sign of like the current market cycle as well. Like we probably have seen a lot of people that have been through 1 to 2 cycles now being in the market right now. Probably haven't seen that flurry of like new people coming in from the retail market for crypto for the first time. So it looks like it's pretty healthy behavior in my opinion from what I'm seeing. Just very keen to see how it unfolds and how it goes from here.
Awesome, thank you. Ben, any sort of anecdotes that you can share around discipline or lack thereof that you could speak about?
So on twofold, like I've seen some people that have large positions that exited and took a lot of chips off the table back at 50, 60,000 pre-election, and then waiting for a deeper pullback, and are now still stuck on the sidelines from 60 to 100, right? So you've got it both ways, where like you've got to be able to I guess in my strategy is sort of have a foot in both camps. Like I think some people are like black or white. They're like I'm either all in or I'm all out. And I think there's definitely a middle ground. And I think all of us are waking up every day at the moment going, wow, new all-time highs with the portfolio. Like Leah said, you've got to balance that. Where's the market at? But fuck, if you've just made $200,000 in a week, it's like, well, okay, maybe maybe I should take some profits here. So I think it's just a mix of like monitoring the market, but also knowing picking the top it's basically a fad. Like it is next to impossible to do. We did some research recently to see how long the top is actually in for from the last cycle, and ETH and Solana, you're in the top 10% for less than a week. Dogecoin was in the top 10% for less than 4 hours. So like, the lower down the risk, the lower down the risk curve you go, the harder it is to pick the top. So taking chips off the table on the way up, I think is a great idea. Apart from James,
I think
James picked the top though. Sorry, Leah. James picked the top, didn't you, man? You got the top 2%.
I think the other thing is, we have to remember that crypto doesn't exist in a vacuum, or at least not anymore, right? So it's very much correlated to macro conditions and other events that are happening in sort of the global economy. I think having that in the back of your mind, and I think a lot of people still think that it's kind of an isolated niche. It's not. It's that I think is very important to keep in mind. What I would like to move on to now is we obviously have Pav and James, who might be able to give us very specific insights into utilizing things like lending or OTC trading as part of the strategy for managing crypto assets. So, guys, do you want to talk a little bit about how that can be incorporated into the outlook or the overall methodology? So, James, maybe we'll start from you. So, do you want to talk a little bit about lending and how that can be weaved in?
Yeah. Look, of course. So, collateralizing crypto holdings is really, really buzzy around the world at the moment. I'm sure people have seen all of there's some crazy viral clips all over Twitter where TradFi people are starting to talk about lending against Bitcoin, writing Bitcoin-backed mortgages, or really interesting collateralization options for crypto, and that's the space that our business operates in. So we see it all the time. To what you guys were talking about before about discipline, we consider collateralizing your Bitcoin, ETH, or stable coins and borrowing against it as a form of discipline, right? You are essentially taking money off the table without selling, and you are essentially loading in a stop loss for yourself, right? So it's an interesting way to take some money today without losing the upside exposure. And to share an anecdote, we have people using loans for all sorts of things in their life. So any sort of large unforeseen one-off costs, or we have actually a great story about a guy who bought a business roughly a year ago, collateralizing his Bitcoin with us. We released the Aussie dollars. He was able to buy a pub. And that's something he'd always wanted to do, but he's a huge Bitcoin guy and he didn't want to lose his exposure there. So now he has exposure to both, right? And obviously over the last year, Bitcoin's gone pretty well for him. So now both assets are up. So he's very happy and he can slowly use the takings or profit from the pub to pay down his loan with us and slowly release his Bitcoin. So it's all about, I don't think any single, especially in this category, in the high net worth category, I don't really believe in any one silver bullet to do it perfectly. You should be balancing things. You should have some crypto that's collateralized and you're borrowing against. You should have some that's perfectly liquid for any sort of unforeseen costs or things you want to get out of. But generally, obviously, we believe lending plays a key role in good portfolio management. Yeah.
Thank you. And I think it goes back to what Ben mentioned before, right? Like you need to figure out what your overall goals are and use the tools available to you as you see fit and as it makes sense. Pav, OTC trading, how can that be weaved into the methodology of kind of managing your strategies?
Yeah, it does two-part from my perspective. So there's the human element, like a relationship management piece, just someone who I think Ben could probably attest this, probably everyone. It's almost like having a sounding board to sort of say, hey, look, this is what I'm trying to do. And then having someone write down that this is what you said you do to sort of quiz, are you sure you're sticking to your original plan? Just that discipline piece sort of comes back as well. But more importantly, like the OTC, so over the counter function, specifically in crypto, I mean, you look at the numbers quite simply, like as you move down the rung of market cap assets, the liquidity really does start to die off, especially when you're talking to high net wealth individuals who may be majority in Bitcoin and ETH, but then they've set aside a certain percentage to go on more speculative plays, right? And let's say, 1 in 10 of them play out, but that one that does play out, it can be quite tricky to manage through the order books yourself how to get in and out of that position. So even with the majors, like there's always sometimes more ideal ways to source liquidity for customers when we're making really really large orders of things like Bitcoin and ETH. Probably not so much these days compared to 4 years ago. But really good example, like we had a customer who just didn't, I guess, reach out, not aware of OTC, placed an order on it was just outside the top 50 asset back at the very start of the bull run in 2021, 2020, 2021, and basically lost 20% on $1 million just because they hit market sell on an order book. So that's a pretty big amount of money to lose, especially when you thought you're walking away with a gain, right? So these are the kind of unknowns that a lot of people, I think 9 out of 10 people couldn't even explain what slippage is, but basically understanding that the market itself, for there to be you to be a seller, there needs to be a buyer, and having someone to be able to articulate to you what does that environment look like right now, how at risk are you for how much you're wanting to sell. That's basically what that whole OTC service is. And, we do provide at Swyftx. There's many, many different options there. But I think just engaging and having those conversations just so you have a better idea of what's happening, I really think that's a big piece of the education. And just understanding crypto just that little bit more. It's pretty important.
Ben, in your experience, do you see a lot of maybe collective shift members using tools like lending and OTC services? Or what tools do you see being utilized?
Yeah, no, definitely. I think we have a lot of clients. We have 110 platinum clients we work with. So these are high net wealths. A lot of them don't understand or didn't know about lending or OTC or, certainly not slippage or spreads or fees, none of that, right? So, we had a client yesterday that signed up, and he was trying to get $250,000 in. And, if you go to a major exchange or a basic exchange, you could be copying 1%, 2%, 3% spreads, you're copying fees. It's just a nightmare, right? So these services are really important. And we tend to work with a lot of people that come to us with a lot of crypto already and look to sort of optimize their strategy. So as an example, someone recently came, I think he had 12 or 15 BTC, wasn't really an altcoin guy, but sort of, wanted to add some exposure to that space. And then obviously trying to create a strategy, then rotate that out into some of the, other assets like Pav said, like you can't just go and dump a bunch of money into, well, you can into a low cap coin, but you're going to get, stung on all the slippage and whatnot. So yeah, it's important to use these services and you're aware of it. And yeah, I think when you're dealing with large amounts of money, it's super important to get right. But I think long term for anyone that's got a lot of money, my goal is anyway, and this is what I sort of teach, is that you want to try and accumulate as much Bitcoin as you can, more broadly property as well. I think Bitcoin and property is the left-hand side of the barbell. That's what you want to accumulate as much as you can of. In the short term, you can use altcoins to sort of leverage up your position in the short term to sort of move the other way, if that makes sense. I never like to sell my Bitcoin, but like if you wanted some exposure, you can be pretty strategic about it.
Awesome, thank you. Before we move on, just a reminder, you can submit your questions. So we will have some time for Q&A at the end. So if you guys have any questions, please submit them now and we can go through them and address them at the end of the session. Okay, wanted to move on to talk a little bit about what to do with idle holdings. So many investors might not be actively trading, might be sitting on assets that they're not actively using. What can we think about in terms of maximizing the utility of those assets maybe, or what to do with them if you're not sort of super active and maybe you're not trading on a daily basis? James, let's throw it to you.
This feels like a question that was planted. Look, obviously, I'm going to say that idle assets, you are leaving money on the table. especially as our sort of ecosystem matures. There's a lot of interesting tools out there to help you use those assets and magnify your gains. You don't have to do it in the same industry. That's sort of what we love seeing people do, is they release equity out of their Bitcoin holdings, for example, and take it into a new industry where they can make a dollar over there, and they sort of divest without losing exposure. So obviously that's one use case. But I would always just say, because of this cohort of listeners, I'd say that where you store your assets is really, really important. So idle assets, although they might just feel like they're sitting there because we're all so used to great bank accounts and how stock markets work, it's very important that you understand like the custody arrangements with the companies that you deal with. And like incredible exchanges like Swyftx are great with things like that. We obviously spend a lot of money on our security as well. So just make sure you understand that process, because idle for you might not necessarily be idle for where you're storing your assets, right? So I'd say that's an important piece to understand.
Awesome, thank you. Pat, anything to add there?
Yeah, I guess from my perspective and our experiences, it's more making people aware that, I mean, you can't really like not talk about it, like all the bad actors we have seen in the last couple of years. It's a rebuilding phase for everyone. I think to some degree, we all got to have some sort of responsibility of, I guess, what's happened. So, our sort of rhetoric, I think, honestly, since the day one, that when we established ourselves, was that, we did believe in self-custody. We did believe in like making it easy for people to take self-storage of their own assets. I mean, that is kind of one of the unique selling points of crypto versus TradFi land. But I still think it's a bit of a mix, right? Like you still want to be somewhat be able to be flexibly liquid should market situations or things change for you. I also think it's important to seek, and consult with people like Block Earner to see, if their products is a fit for you. It's just again, just understanding that we are really in a different, really like emerging ecosystem compared to what everyone's used to. So it is a little bit of at this moment, I think, teething pain in terms of like maybe accessing different products across different platforms. 10, 20, 30 years from now, we're probably talking about universal platforms that kind of do it all in one. But I know from our perspective, like that we're waiting for more clarity on the regulation front and for legislators to really step up. And I know they're doing a great job right now, but it's that these things are going to take time. So I think it's just important to have conversations, be aware, work out what's right for you, and just make sure you're sleeping well at night at the end of the day. You don't want to be sort of thinking 1 a.m. when you wake up, did I lose my private key, or is that exchange safe? Like these are things that you just want to make sure you've sorted out for yourself, and just engage in those conversations and do your own sort of due diligence, read some reviews, that sort of stuff. Yeah, I think that kind of sums it up for me.
Thank you. And Ben, similar question, but maybe can we touch on what you see in your practice? What do people do with idle crypto? Maybe is staking a thing? Are people engaging in that as well to kind of make an extra yield on the side, or you don't really see that? What has been your experience?
Yeah, so I think a lot of people come into crypto if they're new and they've been used to traditional finance. They're looking for a yield, and they're like they feel bored. Their assets just sitting there and not doing anything. I'm not a big staking or yield guy. The only reason I would stake if I'm in an altcoin, maybe like Solana, that has a lot of supply coming into the ecosystem, staking is a good way to sort of offset that. But for me, let's look at Ethereum, for example. Been buying Ethereum for a very long time, to try and get 6-7%, actually not even that, I think it's like 3 or 4% on my ETH. It's just like, I'm not in crypto for 4% gains a year, and it's not worth the counterparty risk for me to have to put that collateral up. On the flip side, I definitely have seen a big shift and more trust being put back in the exchanges, which I think is a good thing. Like we had a guy recently come up to me and he had $32.5 million in a major exchange, an Australian exchange, just sitting there, and he had really not much idea what he was doing. And I think in the past, and I still say like I would 100% recommend a cold wallet, but a lot of these people just can't figure out a hardware wallet. Like to get the ledger, the seed phrase is confusing. They don't want to stuff it up. I'm sure we're all getting messages now like, oh, I go on the other day, hey, I just moved my stuff from, X exchange to my MetaMask. It was a week ago. I haven't seen it. Like, when will it be bounced back? I'm like, nah, bro, that's not how it works. She's gone. So like it definitely is like the cold storage component I still recommend, but I understand it is difficult. In my opinion, probably where we are now with the regulation and this is just from an outsider's perspective, I actually think it's a more of a risk of the individual getting hacked than the exchange, something happening, right? You don't have 2FAs, you click on a link, that's probably more likely. So yeah, again, I don't stake. I'm not a big staking guy, but I do see the benefits in it.
Awesome. Right, how are we going for time? Should we jump into some Q&A?
Yeah, we're 10 minutes, so we're good to go.
All right, let's do it. Okay, so I will start from this question first. How do high net worth individuals actually get their funds across from banks to exchanges to take advantage of OTC? Bank limits stop most people. Pav, I think this one's for you.
Yeah, it definitely depends bank to bank. I would say relationship managers, obviously if you are, considered valuable by your bank, which I think everyone should be to some degree, it is unfortunately just having those conversations to free up limits. Worst case scenario, you might have to go hunting for a new bank, or second to that, you might have to just stick within the refined limits of what your bank will allow you to process. There are different types of transfers that you can do in branch, such as real-time gross settlements that tend to land a bit faster and go through a different payment rail. So engage with your bank, ask the questions, don't take the surplus level as a final answer. And also there's some great just community answers too, people experiencing the same questions. I'm sure Collective Shift, there's lots of people that have had the same issues as well. But again, it's just one of these things that everyone's just trying to navigate right now. It doesn't feel like a forever issue, but it's definitely very painful right now.
Yeah, I'll just quickly add, I think where we tend to send our clients is go straight to an OTC desk. They know the ins and outs of what's happening live. Like, I think the only bank that's restricted payments is Combank, from my understanding right now, up to 10K. So just
Macquarie as well.
Macquarie, well, okay, avoid those two. But I would go straight. We had a guy yesterday, just go straight to an OTC desk, chat to the guys on the desk or girls, because they're going to know like the immediate sort of data on where's working and where's not.
Yep.
Awesome. Next question. Loving the summit, guys. Thank you. My question is around using block earned loans using BTC. What are your thoughts on these loans, considering BTC has increased a lot? James.
Unbiased answer.
James is busy right now. This has been a busy day for him.
Yeah, look, maybe that's interesting to share. Look, when Bitcoin bumps like it is obviously today, everyone's talking about it, but it has, for the last few months, we've seen incremental bumps. The most common behavior from our borrowers is, because they've got the Bitcoin locked up with us already, that they come back and redraw. So our facilities it's a flexible one. So think of it like a line of credit against your Bitcoin. And so you can redraw money whenever you like. You can repay whenever you like. Obviously, there's none of these junk bank fees like early repayment fees or fees for sneezing on a Thursday. Like it's supposed to emulate a DeFi experience with the user experience of a traditional fintech app. But look, obviously, I love what we do, but we have tried to reduce the barriers of entry as much as possible so people can dip their toes. So we write loans from $50. So we literally have people with millions of dollars of Bitcoin that come to us, they borrow $50, they see how it works, they make a repayment, they redraw a little bit, they understand the system, and then they move in exactly what they're looking for. So that's what I'd say is the best way to do it. Build some comfort before you do anything.
Awesome. Okay, next question. This is an interesting one. Rather than hold BTC forever, why not sell all near the top and buy at the bottom? Most seem to want to hold it and lose a great opportunity to further profit. All right, who wants to take
Why didn't we think of that?
Yeah.
I've never thought of that. We should sell the top and buy the bottom. That's what are we doing.
Hey, if you do it, I'll do it.
So I heard this great.
Let's start with you.
I heard this great quote once, and it was essentially the day or the exact time that you start selling your Bitcoin is the moment you start shorting Bitcoin. You're reducing your exposure and betting that the market's going to go down. In my opinion, Bitcoin is the best asset on the planet, and to start shorting the best asset on the planet is a very dangerous thing to do. if you look again on the compounding growth of Bitcoin, plus or minus volatility, it's 45% compounded every year. You do not get that anywhere else, right? That is the best asset, unless you're getting into early stage private equity, early stage investments, you're not going to get those returns. So for me, it's taking chips off the table as we go up, but not selling all your Bitcoin. You want exposure. It's not as easy as selling the top and buying the bottom. Trust me, I've been doing this for a long time. So with these folks, it is very, very difficult.
Anyone else wants to contribute? Otherwise, we'll move on to the next one.
The only comment I would have is just try and be mindful of that mentality. Like, it's always hindsight's 2020, right? Like, it's very easy to look back and go, I should have sold, or I should have done things a different way. But like what we were saying before, I just think it's so wise to set yourself a target rather than let the market set a target for you. Right. So when you're saying, oh, I'm going to sell close to the top, what you should be thinking is, where is my top? What is my investment unlocking for me? Might be a house, might be a Rolex, might be whatever the reason you're investing for. Once that's unlocked, you should be looking closely at how you ladder out.
Yeah.
I think there's also an element of a thesis, right? Like, if you develop a thesis for yourself and what your conviction is based on, that kind of determines when you sell or if you sell. So for me, again, similar to Ben, I have a very long-term view on Bitcoin specifically, which is why I've never sold any Bitcoin. Probably, should have taken some profits off the table, but I just have a much longer time frame and much longer view. But other people might not. So I think it also depends, how you approach the asset class, and again, what your thesis is built on.
Great. Leah, just really quickly, that we're having some social media questions coming in about what is OTC. OTC just stands for over-the-counter trading. So essentially, rather than the software of an exchange doing the exchange for you, it's like a manually delivered, transaction. So the exchange can offer you better rates, better fees, better spreads, but you do need to have a minimum. And Pav, I believe yours is 25,000 at Swyftx.
Yeah, that's right. It's basically like a quote, no obligation, but we kind of look at a range of options of where we can source liquidity and then provide that as an option for you to weigh up against what the market's offering. So it takes out basically all the unknowns in terms of depth of the market, which just is a fancy way of saying, if you place this order thinking you're going to get 100K back, you actually don't know that it goes through, does all the orders. You might get 98K back. You might get 95. You could get 87. And this is where we talk about liquidity. And that's really the big part of like engaging with an OTC desk, is in understanding like what is the sort of liquidity score, I guess, on your assets. Like how illiquid or liquid are they? That's the best way I can put it.
Ben, do we have time for one more?
We got one more, Leah. Yep.
Okay. Each cycle we hear, this time it's different argument. What's the panel's opinion on that thesis for this cycle? Oh, saucy.
No, I go first because we had the same chat last cycle. We actually said this is different. The institutions are here and there's no blow off top. And that's where everyone got stuck in November 2021, including me. And I think I ended up selling like in January, February of 22. So I would just say it just goes back to the original message. Like, this should be definitely the key message out of this. Like, just have a plan for yourself. Like, greed is what gets everyone. It's so cliche, but it's just repeated too many times. I don't know about you guys.
Called a cycle for a reason.
Yeah.
I don't think Pav could have put it any better, honestly, because if we're talking about this cycle being different, and we said that last time, then just by definition, it's no different, right? Yeah. I think every single pump, people feel like it's different. And I think that's inherently the reason why it's pumping, right? There is a new source of demand, or there is, another reason to buy Bitcoin. There's always going to be different reasons to do so, which is what causes the price appreciation, if it's Donald Trump back in power or whatever it is. So there's always going to be small flavors of why things are slightly different. At the end of the day, I do really steer away from saying this time it's different. Tread carefully and bet with your head, not over it, or whatever they say.
Yeah.
I just think you get better haircuts every time, James. That's what's different, mate. I think you guys are spot on. My only other point to add is just understand crypto moves very fast. I think the only thing that's different at the moment is things are just moving at an absolute lightning pace.
Yeah.
narrative's moving faster, the market's moving faster. It's just like go, go, go. So just be nimble and not get too stuck in your ways. Leah, I'm getting the wrap up here. Can you guys quickly go around the room and give just a quick shout out? How can people follow you online? Yeah, for the listeners that want to learn more.
Hey, I'm on Twitter or X at Leah Dashkina, just full name, no spaces.
Same for me, just full name. Twitter as well, at Hundal, and you can catch me there.
Look, we'd have to be really good friends for me to give you my anonymous Twitter handle, but I'm obviously on LinkedIn, and I'd love to hear from you to hear what people are thinking about lending. You'll see me all over social media as well. I'm sorry, Ben, but I'm coming for your crown.
I'm not even
when Shuey.
Yeah, when Shuey. You won behind. Thank you so much, guys. That was amazing. A great way to finish the day. Thank you. I think we had 2,000 people tune in, so unbelievable. Really appreciate your time. Thank you.
Thanks, Ben.
Amazing.
Thank you.
Bye, guys.
Thank you.
Awesome. So I think we are wrapping things up. I just had a few things I just wanted to say after everything. Like, what a day. I can't believe that actually played out. I just wanted to quickly say thank you to everyone that tuned in. I think at the peak we had 2,000 concurrent viewers, which is absolutely nuts. Like, this has been the biggest online crypto event in Australia. Completely free, no sponsors, no speakers. We paid for all of this, and we do not want anything for it. We just want everyone to really try and crush this bull market. I truly, believe that. I want to say thank you to all the amazing speakers and moderators, all 32 of them. These guys weren't paid. They came in, to volunteer their time, and just the content today was phenomenal. I thought there wasn't any panels that let down. I thought the content was brilliant. It had a bit of everything for everyone. So thank you to all those speakers. Make sure you check them out on socials. And all the Collective Shift team here, well, I think we've got 5 or 6 people. Huge shout out to Alice, who's been running around, our team that moderated the sessions, DT on the questions as well, and even Josh on the socials. It's been epic. Socials have been blowing up. The production crew, Brad and the team from live streaming services here in Melbourne. If you need some live streaming stuff, these guys have been phenomenal. I thought Alice and I were going to do this off a laptop about 3 weeks ago. That would have been a fucking disaster. So these guys set the whole thing up. My house has been turned upside down for proper production. So hopefully you appreciated all the work we put in. Drevs as well on the graphics. Viewers, the chat, the engagement, the questions have been phenomenal. Thank you so much. To hit 100K on the live stream, like, that's absolutely epic. Like, that's going to go down in the history books. Like, where were you when Bitcoin's at 900K? Where were you at 100K? We're at the summit, at the old hashtag summit pump. So I'm super pumped about that. And maybe there is a correlation between the summit and crypto. So maybe we need to do these more regularly. Actually, not too regularly because I'm cooked after this. But thank you so much. Make sure you follow us on social media. You can follow me, Ben Simpson, on pretty much all of my socials. Collective Shift as well. And make sure you check out all the Collective Shift team. If you're looking for a podcast as well, I've been doing Ben and Bergs now for over 2.5 years if you're after a good crypto podcast. And if you want to learn more about what we do, you can head over to our website. But as promised, I will not be shilling anything. Just go over and check it out. Thank you, everyone. Good evening, good night. I'm going to grab a beer, and thank you so much, and we'll see you on the next summit.